Hello everyone. Today we shall be discussing on a very basic topic, that is Introduction to Partnership Form. Partnership is one of the important forms of business organizations. It is an association of two or more persons who are competent to enter into a contract, making agreements, who contribute capital, undertaking a lawful business for obvious reasons, that is earning profit, and sharing the same in an agreed proportion. Partnership is a trading organization which results from a contract and hence is governed by two acts, that is, the Indian Partnership Act 1932 as well as the Indian Contract Act 1872. Therefore, we can conclude that when two or more persons come together to carry on a business with a view to share profits or losses, such a relationship is called as partnership. At the history of partnership. Why was a partnership needed at all? Do you remember a person named Sole Trader from your previous grade? If not, let me tell you a story. There was a man called a sole trader who carried on business exclusively by and for himself. He gained profits and bared the losses solely. He brought capital requirements such as money, assets into the concern as well as organized and managed the trading concern all by himself. Now, this went on for a while until the disadvantages to this practice came into picture. It was a sad ending. Then emerged partnership firm. Sole proprietorship suffers from limited resources, hasty decisions and temporary existence. As a remedy, partnership emerged as a form of business organization. One can say that partnership is an extension of sole proprietorship because in sole proprietorship, the business is carried out by the individual with limited capital and limited skill, and due to this disadvantage, partnership is better than sole trading concern or sole proprietorship. Further, due to limited resources of a single individual carrying a sole proprietorship, a larger business requiring more resources and investment cannot be thought of. On the other hand, in partnership, a number of partners join together with their capital to form an agreement and then they carry on a business jointly. Now, let us take a look at the definition of partnership firm. According to Section 4 of the Partnership Act 1932, partnership is the relation between persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. Further, Professor Henny defines partnership as the relation existing between persons competent to make contract who agree to carry on a lawful business in common with a view to earn private gain. Now, over here, there is a clear understanding between the two definitions wherein they say that for a partnership to exist, there must be a relation between the persons related. Further, these persons must be competent enough, or let's say capable enough, or they must have the particular ability to make contract with the help of agreements to carry on a lawful business. Mind you, not just any kind of business, but a lawful business. And the view must be to earn profits. One more thing to note over here is this particular lawful business, it can be carried on by all the partners or any one of them who is acting on behalf of all. Now let us see an example over here. A and B buy 100 tons of oil which they agree to sell for their joint account. Now over here what we have to do is we have to prove whether this particular situation accounts for partnership or no. There are two persons, A and B. This particular phrase fulfills the criteria for a partnership, but not wholly. We have to take a look into this example in bits and pieces. Now, A and B, they decide to buy 100 tons of oil. They are deciding to buy, which means there is a trading activity or there will be a trading activity going on over here for sure. Now, over here, they agree to sell for their joint account. There is an agreement between A and B to sell this particular 100 tons of oil for their joint account, which means after selling this particular tons of oil, they will gain profits. So can we classify this particular situation as a partnership? Yes, this forms a partnership and A and B are considered as partners. Now let us take a look at another example. We have the same A and B. They are buying 100 tons of oil and they agreed to share it among them. Do you find a mistake over here? For sure. Even though there are two partners, even though they are buying 100 tons of oil, even though there is an agreement among them to conduct a trading activity, they are sharing this particular tons of oil among themselves, which means there is no scope for gaining profits or bearing losses. Hence, this particular situation does not form a partnership as they have no intention to carry out business. No business, no profits. Now, let us dive into the essentials of a partnership. Yes, we saw the definitions. Yes, we saw the meaning. We also saw why partnership came into existence. Now, let us take a look at the essentials of partnership. Firstly, there must exist an agreement between the partners. Secondly, the motive for a partnership is to earn the profit and share the particular profit between the partners. Likewise goes for the losses. If the partnership firm incurs losses, then they'll have to share the incurred loss among themselves in the agreed ratio. And lastly, the agreement must be to carry out the business jointly or by any of them acting on behalf of all. Please remember Section 4 of Indian Partnership Act 1932 over here. Ahead, let us discuss the types of partners. In all, there are 6 types. Number 1, active partner. A person who contributes capital as well as takes active part in the management of the firm and looks after day-to-day affairs of the partnership firm is called as active partner. Active partner, he brings in capital, he takes active part in the management of the firm, and he looks after the day-to-day affairs of the firm. Number 2, we have the sleeping partner who is completely opposite of the active partner. Sleeping partner is the one who contributes capital. He shares the profits or losses, but he never participates in the management of the partnership firm. Number 3, we have nominal partner. Now, nominal partner, he neither contributes capital nor does he participate in the management. So, what is his actual role? The nominal partner allows to use his name and business reputation for the benefits of the firm. Let us take an example over here. Let's say there is a partnership firm A and B are carrying out the business and they are the partners, but there is a partner C who neither contributes capital nor is he participating in the management of the partnership firm, but he has given his name to the partnership firm. Even though the partners are A and B as well as C, but C is not visible among the partners, he has given his name to the firm. Let's consider another example. Let us again assume A and B are carrying out a partnership firm, but Mr. Sachin Tendulkar has given the name to that particular firm. Let us say it is an NGO or a firm that carries out social services for blind children. And Mr. Sachin Tendulkar has agreed to give his name or provide his name for the firm. What effect does this have? This helps in increasing the goodwill of the firm in the market as well as the business reputation increases, and this in turn benefits the firm as well as the partners within. Number 4, minor partner. A person below the age of 18 years is known as minor by law. Now, a minor is not competent by law to make a contract. Now, since agreement is the essence of partnership, as we saw previously, a minor cannot become a partner. So how can he then enter the premises of the partnership firm? He can, however, be admitted to the benefits of a partnership with the consent of all the partners, with the mutual agreement among all the partners. In such a case, the minor contributes capital and shares the profit of the firm, but he does not participate in the management of the firm, and his losses and liability are limited to the extent of the capital contributed by him. A point to be noted over here is after the minor attains the age of majority, that is, when he completes 18 years, his liability becomes unlimited. Moving ahead, fifth partner is partner in profits only. Now, as the name suggests, this particular partner, he will contribute capital but only share profits. He will not share nor or he will not bear the losses of the firm. Although he is not allowed to participate in the management of the partnership firm, still he is liable for the debts of the firm. So partner in profit will contribute capital, he will share into the profits, but he will not be allowed to take part in the management, nor will he share the losses. Lastly, we have partner by estoppel. Now this particular concept needs a bit explanation. A person who is not really a partner, but still he creates an impression that he is a partner of a particular firm is called as partner by estoppel. Since he is not a partner in fact, he does not contribute capital. Also, he does not share the profit or loss, nor does he manage the firm and is not fully liable for the debts of the firm. However, he is liable to make good for any loss suffered by the persons relying on his being a partner. So basically, we can say partner by estoppel is just a mere imaginary partner. Why am I saying this? Because this particular person, he is not contributing capital, nor is he willing to share the profits, nor bear the losses, nor is he taking part in management. Even he is not liable for the debts of the firm. He is just there for an imaginary purpose. That is the concept of partner by estoppel. Thank you.